So we're going to talk about the defined benefit pension plans. And for anybody who's not entirely sure, a defined benefit pension plan is pretty much what the name implies. Your pension benefit is defined by the rules of the plan. Unlike a defined contribution, unlike your own RRSP, there's no direct correlation between the benefit you get out of the plan and the amount of money you put in. You're going to find that your pension benefit is based upon a formula of service and earnings and some fixed percentages, and I'll explain how that works and what they are. Because Air Canada is a federally regulated employer, our pensions, like our labor laws, like our health and safety laws, are all federally regulated and not provincially regulated. Therefore, we fall under the Federal Ministry of Finance through something called the Office of Superintendent of Financial Institutions. That is a regulator of the financial markets in Canada. They are also charged with regulating registered pension plans in this country. They do that through a piece of legislation called the Pension Benefit Standards Act that defines all the things that pension plans must do and must not do. Essentially, the Pension Benefit Standards Act, the PBSA, sets the minimum requirements for pension plans, right? What are the minimum things that must happen for plan members? Because registered pension plans are essentially tax shelters, the Canada Revenue Agency also takes a very keen interest through the Income Tax Act. And the Income Tax Act is on the other end of the spectrum and essentially sets the maximums. What's the most time you can contribute? What's the most money you can put in? What's the most money you can get out? All of those limits and parameters are set by the Income Tax Act. Your pension plan is a bargain benefit from the collective agreement. Just like everything else, like overtime, like shift premiums, everything else in there, all of this pension plan at one time or another was bargained in collective bargaining with the employer. So there are a few minor articles and clauses in the collective agreement, in Article 20, some MOAs and LOUs towards the end, but by and large, the majority of the pension plan is in a standalone 86-page document called the Pension Plan Text. That is a legal document that is registered with both OSFI and CRA, and it's that legal plan text that allows the tax-exempt status, that allows you to claim your pension contributions as tax deductible on your income tax. All four of these documents obviously must agree with each other. Particularly our text and our plan and the collective agreement have to conform to regulation. These four documents define the sandbox in which we play with the company in terms of pensions. There is a pension committee that monitors the pension plan and matters of administration, and this is that committee. I'm on the top line, Christopher Hiscock. I'm out of Vancouver, 764. Jim Burden, a gentleman back here in the corner, is here out of Calgary, Edmonton. We have members across the system at all of the Air Canada bases. We also have a retiree representative, a gentleman named Ed Wainwright, who was a former ex-Canadian Airlines Pension Committee chairman before I was on the board. And the reason he's on there is the Pension Benefit Standards Act says that every pension plan in Canada that has 50 or more retirees must have a retiree representative on any employee committee to advocate for the retirees. So that's the function that Ed currently fulfills on this committee. We also have a general chairperson assigned at a District Lodge 140 to oversee, make sure we're good girls and boys and we don't do anything untoward that we shouldn't. And we meet twice a year with 3 members of the company. Typically, it's 2 from the pension department and 1 from labor relations, but over the last couple of years, I think we've only seen a labor relations person in here once. This is the least desirable assignment, apparently, in the labor relations world, and so they skip it every opportunity they get. So this pension committee, as I mentioned, we meet twice a year with the company. We meet in October and in April, typically in Montreal. We have a few other conference calls from time to time as need be over various aspects, but 2 face-to-face meetings. We have access to all the financial information about the pension plan, the investments, the returns, actuarial reports. We get to make comment on it. We get to ask questions on that. We do not have any say in how the pension plan is invested. Air Canada, as a sponsor to plan, is 100% responsible to fund this pension plan. Therefore, they are 100% responsible for how the investments and how the funding takes place. We get to advocate for any members that are unable to resolve their own personal pension issue. If the fine folks at the Magic HR Connects Kingdom cannot help you when you phone them and you have something out of the ordinary, you can contact Jim, you can contact me, anybody else. We have a different group of individuals within the pension department that we talk to, and they're very good at their job, and they'll get us a resolve typically within 24 hours. And whatever your issue is. That doesn't necessarily mean you get your own way. It means you get an answer within 24 hours that may or may not be an answer that you like. One of the key components of this is the IAM holds a 4-3 vote on any matters of administration that come before this committee. Simply put, what that means is that nothing can happen within this pension plan, no changes can be made to this pension plan without the consent of the IAM Pension Committee, and ultimately any changes that are made to benefits have to be done through a ratification process on all of the membership, the same as anything else in the collective agreement. So Air Canada currently sponsors 7 defined benefit pension plans, one for each unionized group, one for their management and unorganized group, and an executive plan for the high-priced health. The financial assets of all 7 pension plans are invested in one investment account. It is called the Air Canada Pension Master Trust Fund. $19.5 billion as at 1/1/18, which is the last actuarial valuation report that we have. That represents a $1.5 billion increase to this plan in 2017, an 11.9% net return on investment after fees and expenses. That is a significant amount of money. This is a very well-run plan. Air Canada is almost always in the top quartile, top 25% of pension plans in Canada with assets over $1 billion. For the last 5 years, they've actually been number 1. This is a very large plan. It's the 15th largest pension plan in Canada. 13 of the 14 plans larger than Air Canada are all government pension plans. Only Bell Canada Enterprises has a larger corporate pension plan. So very large, very well done. This money is held in trust at CIBC Mellon. All the assets are managed through here. They're managed in-house by the Air Canada Pension Investment Department. They revamped the way they did the investments in 2009, got much more sophisticated, took away most of the reliance they had on external managers. They're doing it in-house, and they've done a remarkable job at turning this pension plan around since 2009. But this money, like I said, is in trust. Air Canada does not have access to this pension plan money, with the sole exception of putting money in every month in the form of employee contributions. And once a month, they get a check out from this plan that they then distribute to the 32,000 retirees and survivors as monthly pensions. So they can't buy airplanes with this. They can't pay executive bonuses. They can't increase shareholder dividends. This money belongs by law to the members of the pension plan. Each of the 7 pension plans own a pro rata share of this $19.5 billion fund. The IAM is the largest union, as you might expect, has the largest share. We're just over 30%. So $5.86 billion belongs to you people in this room. Demographically, Air Canada's got just under 50,000 members in the plans. That includes active and retirees. You will notice that the retirees far outweigh the actives across the company, and that's the same as within the IAM. 19,000 retirees, and again, these figures are as of 1/1/18, so these are 11-month-old figures. These are taken from the actuarial valuation at the beginning of this year. Our pension plan had 7,000 active members, 12,400 retired. I can guarantee you we've got about 500 people retired in the last 11 months across the system. An awful lot of people have headed for the doors, particularly in the airports group, after May of this year when they got the last taste of the $13,500. The average age of our members in this pension plan still active is 50, with just under 19 years of service. Average age of our pensioner survivors is 73 and making $25,000 a year. The IAM going concern funding this year is 139% funded. So if we wind up, basically everybody could look at getting about an extra 40% on your pension. Maybe that's something we want. I don't know. 133% last year, so we actually increased 6% in 2017. The surplus in our plan alone is $1.5 billion. That's the surplus sits in the IAM plan. The Master Trust Fund overall, 138% funded, a $5 billion surplus, up from $4 billion a year ago. But this is an expensive business. In 2017, Air Canada paid out almost $750 million in pension payments to retirees in 2017 alone. They estimate that with 3 years from now, this is about $900 million a year in pension payments coming out of this plan to support retirees.